Today we have some absolutely massive news, which to me might seem like an absolute top-level fixing of the game. However, the reality is that this is far, far more serious and actually gives you a huge indication of where the ball is headed. Wayne Gretzky said you always want to skate to where the puck is going to be, where the biggest financial minds in the world think the puck is going to be. Check this out. Nope, we're not going to be talking about BitBoy's Lambo on this episode, though it is quite possibly the most salacious piece of crypto drama we've ever seen. Again, I commented a few times on this. I think I might have to do a video sort of recapping my perspective on it, because apparently that's what you have to do here. But in reality, there's something far more important going on than anyone and their Lambo drama, and that is one of the world's biggest banks, Chase, banning any and all crypto-related transactions for their UK customers. Now, in a deeper statement, they said customers will receive a declined transaction notification if they do attempt to make a crypto-related transaction. They said, we're committed to keeping the customer's money safe and secure. We've seen an increase in the number of crypto scams targeting UK customers, so we've taken the decision to prevent the purchase of crypto assets on a Chase debit card or by transferring money to a crypto site from a Chase account. That's right, you can no longer take your money and convert it into crypto if you're using Chase Bank. And this is all due to crypto scams here in 2023, which, while there are crypto scams, they have been prevalent really since the inception of the industry. I wonder what could also be going on. As Eric Voorhees says, this is the vibe. That's right, dinosaurs being scared of the meteor, that is Bitcoin. In my opinion, that is most certainly the vibe. Let's dig in a little bit closer, because what could possibly actually be the reason why right now they want to cut people off from crypto? Well, it just so happens that today we're seeing that Jamie Dimon, the head of JP Morgan Chase, saying that he's warning of a 7% Fed rate still possible. He says the difference between 5 and 7% more painful than 3 to 5%. Of course, that doesn't feel like the case, but we know that the difference between 3 and 5 might not have broken everything, but the difference between 5 and 7 most certainly will. That's because we're seeing reports of baby boomers actually going homeless. That's right. Our retired parents' generation is no longer able to afford to live in this modern society, and they're going homeless at a rate not seen since the Great Depression, per MoneyWise, with reports, of course, that home prices could fall up to 30%. Now, the real question is what could be causing this? Because we know that markets have fallen. We know that in general, markets are weak, and the stock market and real estate have effectively contributed to this massive swell in wealth for the baby boomers. I mean, if you own any home at all since the 80s and 90s, you're pretty much rolling in millions of dollars of profit for just living, for just breathing and existing. We all know those houses were 5 and 6 figure purchases a few decades ago are now trading for 7 figures now. So literally just being part of that generation was an absolute boon. But now we're entering into a new period. And let's look again to Jamie Dimon, who is telling clients to prepare for a worst case scenario of benchmark interest rates hitting 7%, along with stagflation. Now let's talk about this term, because we've used a lot of economic terms here: inflationary bear market, inflation with recession, and now let's talk about stagflation, which effectively all express similar concepts here. An economic stagflation or recession inflation, right? Recessionary bear market is a situation in which inflation rate is high or increasing. We have that. Well, it's no longer increasing, but it's high. The economic growth rate slows. We have that. And unemployment remains steadily high. We do not have this yet. And that's precisely what the Federal Reserve is trying to create, which is a crushing amount of joblessness, which effectively will take away from the inflationary headwinds in theory, but it will also add a dilemma. It presents a dilemma for economic policy, since actions intended to lower inflation may exacerbate unemployment. We're literally seeing this play out in front of us. And you know what everyone's comparing this situation of an inflationary bear market to? The 1970s. They're comparing Jerome Powell to Paul Volcker and the Fed, who raised interest rates to astronomical highs to control inflation. And wouldn't you know it, my friends, the term stagflation was literally invented for the 1970s recession. And it led to things like oil surging in price, creating the 70s oil crisis. What do we see as a hot button topic over and over and over again? In today's modern economy, are oil prices surging up, causing the United States to deplete its strategic petroleum reserve to control optics around the situation in an election year. Absolutely despicable behavior when effectively you're not solving the problem, you're just making it so that there really is no buffer in a time of true emergency. There was, however, one asset that did incredibly well during the 1970s, and that, my friends, was gold. As you can see here, gold made an astronomical rise here. Since the beginning of the 1970s, January 1970, all the way literally through the entire decade until January 1st, 1980. It literally, to the date, 10 years, pumped over 23x. Them some crypto numbers, my friends. And in a period of stagflation, where US stocks were considered to be in a lost decade, gold thrived. And that's why it's really funny when you look at things like Bitcoin, considered digital gold. You look at a world that's no longer unipolar as much as it used to be, with the economic center of gravity moving somewhere into Asia, where it had been nestled securely between Europe and the United States for so many decades. You're looking at the opportunity for effectively more nations to compete on things like currency, on things like trade. And of course, something that's a neutral asset becomes far more exciting for the world that we're developing into. More importantly, we're looking at a time where stagflation, the economic forces around us, will be pushing towards something like gold. And this time we have a way better version of gold, a version of gold that is verifiably scarce, and a version of gold that I believe a new generation will take to en masse. And this is why the biggest banks are cutting you off from crypto, cutting you off from Bitcoin, right as they're predicting an era in which that might very well be the only asset that you can get your hands on to protect you from the economic headwinds ahead. Now, of course, this is just my speculation. I'm just a guy in a Nintendo 64 shirt from Walmart, but I really do believe that this is a huge decade for Bitcoin. And I really do believe that the Bitcoin ETF is going to be one of the most impactful products to the entire crypto sphere. Put quite simply, I think this is a very interesting time for an ETF to be taking hold and for the big banks to decide, okay, now's the time that we want to get in on this whole Bitcoin thing, just in time for the stagflation, where their other asset classes are not going to perform. I should also mention that real estate is destined to come down in price, and that's because population dynamics are changing. There's less and less people coming into the world, less and less buyers for expensive real estate, less and less people to buoy prices up further. Just something to consider is that asset classes are not going to perform the same in the future that they have in the past. The rules of the game are changing, but they're changing, in my opinion, in favor of Bitcoin. It's also important to realize that economic expansion without the debasement of money is still possible, and it's always powered by technology. In this case, AI and crypto, some combination of the two, are very interesting to keep your eyes on for the future. Check this out. It was revealed to be a troll post, but Sam Altman, the creator of OpenAI, said AGI has been achieved internally. AGI is artificial general intelligence. It's a hypothetical type of intelligent agent. Effectively, this is the super intelligent AI that we all are super worried about that could change the entire world. That is the sort of self-serving, self-growing, ever scary type of AI, but also the type of AI that could truly modernize and change the entire world. That is, of course, if it doesn't turn on us and kill us, which it very well might. That is, of course, if you don't say please and thank you to your AI, which I always do. The post was edited. Obviously, this was meant to be a meme. He said, y'all have no chill. When AGI is achieved, it will not be announced in a Reddit comment. Dear Lord Satoshi, we hope so. That is for sure. All that being said, we have a very interesting next few years as crypto, AI, and these incredible technologies continue to push forward, as we have a massive amount of crypto games that could potentially onboard millions, hundreds of millions, maybe even billions of people to the blockchain in a fun and seamless way over the coming decades. It is not a question of if, but when, and really, it is an exciting time to be alive as Bitcoin is facing its first era. It's not just designed for this, but it's going to get a chance to genuinely add value to society by giving people a very necessary outlet. So are there going to be games by the big banks? Are there going to be games by huge financial entities as they play with optics and control what they can control? Well, absolutely. To me, it's another installation in the story of how those with power will use it to manipulate. And we all know the story of how JP Morgan was actively fighting crypto throughout 2018 and 19 while they were buying. I mentioned this on my last video. Go check that out. It's absolutely shocking. And so what I'd urge you to do is understand. Don't look at what they say. Don't look at what they do. Follow the money. The money never lies. And right now, the money is showing that the biggest banks in the world see Bitcoin as a huge part of the short, mid, and long-term economic future. As always, if you guys enjoy this, smash that like button. If you hated this episode, you know what to do. Hit that dislike button. I can handle it. And make sure to check out this video. It's even better than the one you just watched. I'll see you very soon on the next episode.